All right, we are live. Welcome back to the Blake's Business Morning Show. We're here on Facebook. You can catch it later on YouTube if you're not watching it live. But if you're here, you're watching it live. So that's great news. We got our morning cup of coffee. Thanks, Pacific Life, one of my internships. We got an iced coffee this morning, even though it is a sub-freezing day here in Fort Worth. So very cold, but never too cold for an iced coffee. Our corner coffee is a nice hot coffee, so we want to have balance here. If you're looking for something to warm you up on this blistering day in Texas, there you go. Grab a hot cup of black coffee. All right, let's dive right in. Yesterday, all three major indexes finished down. Continued volatility from the Ukraine-Russian crisis as it continues to amp up. Rhetoric and actions both continue to go a little bit further as Ukraine called up its reserves. It looks like they're ready for war. They believe that Russia is going to invade. So that obviously affected the markets. There's going to be some downstream effects from that, especially in the oil and gas industry. Oil prices have been up due to it, but today seems to be a little bit better. Things in the market are bouncing back. All three major indexes, S&P, Dow, NASDAQ, all up slightly, ever so slightly. Less than 0.5% at the moment, but green is always good in the stock market. So Russell 2000 also up by less than 0.5%. So that's the overall. We're seeing some green. We're seeing a little bit of breakout. Like I said, sector-wise, energy up big. Relatively, they're up 1.5%. Real estate's up 0.5%. Materials, healthcare, technology, financials, and consumer staples are all up. Utilities is essentially flat. The only laggards right now are industrials, communications, and consumer discretionary categories. So a broad overview of the market, U.S. equity sectors. As far as equity factors, value and growth are kind of in tandem right now. So the whole market's lifting a little bit, and that's good news. We'll see if it continues throughout the day. As I've kind of talked about, the Russia-Ukraine situation is the biggest thing on the market's mind at the moment. It's going to tip things left, right, back, center. So expect more volatility, expect more up and down. That's all there is to say about that. Let's check in on the crypto world, see what Bitcoin is currently trading at. This was a spur of the moment decision. So, oh, come on. My Gemini asking for a password. That's brutal. So Bitcoin's up right now, trading just over $38,000, 38,500. So 38,634.80. The current Bitcoin price as we speak. Ethereum, let's get a check on them. Currently, it's trading at $2,700, so $2,705.61 to be exact. So both of those are up slightly. So good news in the Bitcoin markets. So let's jump into our news of the day. Why not get into the news of the day? Biggest news story kind of came out yesterday, but is continuing today. Is Meta or Facebook is escalating its TikTok rivalry. That means Reels is going global. So they're taking their Reels, their copycat TikTok platform, and they're taking it to every country they operate in. Meta was down yesterday, or slightly up. Really, the markets just didn't care. I don't think that many people believe that Reels is a strong competitor to TikTok. TikTok continues to gain market share. They continue to be a dominant, growing force in the social media space. At the moment, Meta is up 0.5%. So what Zuckerberg was probably looking for a win with the announcement, it has not gotten it. So Facebook / Meta, whatever you want to call it, still trading significantly down on the year. What is it? Yeah, trading just above 200. January 1st, that was well above 330. So Meta still down. The Reels business news has not moved the needle. Looking for what else is on the business page. Let's check it out. Not a ton on the front page today, so we'll keep it pretty light. Maybe we'll dig into a couple other things. Something I haven't covered, SoFi is buying Technisys for $1.1 billion. I don't know much about this deal, but it has been making the news. I saw a Seeking Alpha article that was very positive on the deal. I don't have enough information to give you a full-fledged detailed recap, but it's something interesting. Anything in the M&A space, adding $1 billion to your company could be a positive or negative based on dilution and different factors of the deal. So if you're interested in M&A, go check out that SoFi buying Technisys. I think that's how it is pronounced. And then the next story, this is kind of a combination of a couple stories. Wall Street Journal came out with a report that it's never been better to be a white-collar worker, as wages have never been a better time to ask for a raise. White-collar pay outpaced gains from blue-collar pay for the first time over the last year in January, and so they basically said it's a good time to get a raise. I think it was 4% white-collar pay. Wow, today is a struggle. The cold has got me down, but white-collar pay increased by like 4.5% in January, outpacing blue-collar jobs by 0.5%. So if you're in a white-collar profession, business analyst, finance, anything like that, maybe it's time to ask for a raise in this performance season. And along with that, the New York Post, pulling from liquidity, announced that Goldman shelled out absolutely monster bonuses for Wall Street talent. This has kind of been a story throughout the last year. Liquidity has been able to gather an incredible amount of data on junior pay on Wall Street, essentially getting messages or DMs and inside information from analysts, associates, VPs themselves. If you don't know what Liquidity is, it's a up-and-coming media brand. Started as a meme page. They now have a podcast with, I think it's F-Boy Island star Mark Moran. Big Swinging Decks podcast. Pretty good. I've listened to a couple episodes. I enjoy it. It's definitely a different take on the kind of finance, business podcast space. Pretty humorous. They have a lot of fun on it. So, but they basically have compiled probably the most in-depth statistics on Wall Street pay of anyone out there, and that being a meme page, being better to do that than mainstream media is kind of funny to me. When you have, the New York Post is a, half news media, half gossip blog, but still in the mainstream arena. So Goldman shelled out more bonuses than any other bank. For junior salaries, that ranged from 76% to 226% of their annual or of their base compensation. So that means that second-year analysts, the median bonus was $95,000. That's an absolute ton of money, taking their comp to $220,000 when combined with $125,000 base. So that's the median. There's people higher than that, top bucket, middle bucket, bottom bucket. That's how Wall Street does their bonus pools, or at least for the most part. In third-year associates, a $375,000 median bonus, which combined with base salary brings your total up to $600,000. So associates are usually 2 to 3 years out of undergrad or 1 to 2 years out of grad school if they're career switchers. So these are people in their 20s that are making obscene amount of money on Wall Street, bringing you back to almost the 80s heyday. It feels like Wall Street pay has definitely slumped since the financial crisis. There's been a lot more competition with tech jobs and things like that too. So this is kind of a boon and a turnaround for Wall Street and people looking to get into investment banking. Now may be the time, because compensation is certainly coming back to that pre-financial crisis era, that 1980s boom time feel. And there's a shortage of talent. All the banks are fighting for talent, and Goldman, being the top dog that they are, is shelling out money much faster than JP Morgan and Morgan Stanley, their biggest rivals. There's a full spread on liquidity. There's this New York Post article. Just Google Goldman Sachs hands out big bonuses, and you can see the full slides that liquidity sent out in their exec.sum. You can also subscribe to exec.sum. I subscribe to it. I try to read it every morning if I have time. It's pretty good. It's got a lot more. It's got a lot more a lot more fun in the newsletter, bringing you the business news than some of those other ones that are out there that you probably know the name of. But I won't trash live here on the morning show. So that's it for the top news. I thought those were the interesting stories of the day. That's what caught my attention for the day. Now let's jump into financial history. We do this every day. I should probably start preparing for it. From Jason Zweig's blog. We'll go camera 2 for this one. Oh, maybe we'll go camera 3. We haven't used camera 3 very much. Camera 3 it is. All right, let's see. Let's learn what happened in business in today's past. All right, we'll start with 1965. I think this is one that jumps off the page, and then we'll go to the other one. Michael Dell was born on this day in 1965. Famous story, he later drops out of the University of Texas at Austin to found Dell Computer with the radical idea of assembling made-to-order computers. Story as old as time. Michael Dell, yeah, I mean, it's the classic founder story, but interesting. Today's his birthday, so happy birthday, Michael Dell. I hope you're enjoying your plethora of riches and success on this day, doing something fun. I would be if I was that rich. All right, 1995. Wall Street is in what trader at Furman Sells calls jubilant, boisterous moves as Alan Greenspan tells Congress that he sees no need for the Fed to raise interest rates. Interesting. Less than 4 years after it broke the 3,000 mark, the Dow Jones Industrial Average closes above 4,000 for the first time, finishing the day at 4,003.33. Wall Street Journal declares the next day stocks crossed 4,000 for the first time, but the visit there may be brief. A correction is now inevitable. I'm not sure if there was a correction after that. I don't know the 1990s stock market by day, unfortunately, but that is interesting. 4,000 for the first time. Obviously, we are a far cry from that as the Dow is trading above 33,000 at the moment. So that's a little important lesson, really cool lesson on the power of the stock market and investing in the stock market, especially at the index level. If you don't have the in-depth knowledge to pick stocks yourself or don't want the risk of, or have the time to pick out 10 stocks yourself, investing in index funds can have phenomenal returns, and that compound growth over time can really have impressive impact. So if you're looking toward retirement or socking money away to invest, indexes are a good way to go. I mean, they're low maintenance. You can find them for cheap fees. There's millions. Vanguard, BlackRock. We're talking about all the $1 trillion asset managers here. So interesting. So just that's 27 years, you have, I'm not a math guy, so whatever, 6, 7, 8, 10-fold return on the Dow Jones right there. So, and that's just investing in indexes. So, interesting stuff to finish the day. Let's see, do we want to finish? Do we have any quotes? I don't have any quotes or ideas. We talked about growth mindset yesterday. I would like for y'all to stick with that one. And stay safe, stay warm if you're here in Texas. I don't know if it's cold everywhere else. I haven't watched the news, but it is certainly cold here. So this has been fun. Another edition of Blake's Business Minute, Blake's Business Morning Show. Check out Blake's Business Minute today. Go to the page. You can follow us on Instagram, TikTok, subscribe on YouTube. If you're watching this on Facebook, throw us a like. And comment, slide into the DMs, let me know what you want to see from this show. Let me know what you want to hear more of. Let me know what you want to do. This is a viewer show. I'm here to make the viewers happy. I'm here to give you the information you need to start your morning while you drink your beautiful cup of coffee. So let me know. I'm open to all suggestions, criticisms, forms of flattery. So just you can tell me how awesome I am or how much you hate it. So that's up to you, the viewer. But hope you enjoy the show and have a happy hump day. Happy Wednesday. We're almost to the weekend.